folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Wednesday, February 20th, 2008. Well, as we get started, I want to get into technicals right away almost. I just want to touch a little bit about what happened today. Today we saw some key economic data being reported this morning. We saw some earnings influencing the day from yesterday. And overall, we saw some odds and ends going on later in the day with the Fed funds minutes. But all in all, we saw a key breakout line being taken out to the upside today, which basically caused the rally. And we were right on top of this, watching this all day, and the line was very apparent, and I'm going to show you guys that line. These breakout points can all be applied. It doesn't matter what culture you're from. It doesn't matter where you're from, what charts you're looking at, whether you're looking at indexes, stocks, from Japan, stocks from the United States, stocks from China. These technicals apply. They're universal. It's like a universal language. Just like math is a universal language, technicals are based off of that math and that geometry, and you can use it every which way. So, you know, we're very happy to know that all across the world these videos are being viewed and people are learning technicals, because it's really the truest way to trade, the truest form of trading out there. Alright, so let's take a look today, folks, at what we saw in this market. Now, we saw a key technical breakout line taken out around 1 o'clock this afternoon. We saw some key reversals over the course of the day, but let's touch on what happened early in the day. We saw the future slowly declining here, as you guys can see, all the way right up to around 7 o'clock, at which time we got a kind of a sideways consolidation pattern right into 8:30. Now, at 8:30, we had the CPI data. Now, the CPI measures inflation, both inflation across the board and core inflation, which excludes food and energy. Now, the keys here are that both numbers came in slightly hotter than the market wanted. And many people might say, well, why does that matter? You know, okay, there's a little more inflation out there. You're talking about 1/10 more. You know, it came in at 0.4 and 0.3 between the regular CPI and the core CPI, respectively. But the question is, well, why does it affect the markets? Well, the key is here, folks. The CPI is directly proportional, at least the market views it as so, based on what the Federal Reserve, will do to interest rates. Now, if these numbers show more inflation, the Fed cannot cut rates as dramatically as the market may want, thus not helping the economy quite as much on the upside when we get back into an upswing and making that softer landing, what we're trying to avoid, this recession, or how bad the recession will be. Now, in my opinion, we're already in a recession. Maybe the economic data doesn't show it yet, but ultimately we are in one, and you're going to see that coming out in the numbers very shortly. In many instances, you'll see recession. We're already half over in a recession once the economic numbers show that we're in a recession. So oftentimes once that happens, the bottom of the market is actually in once the numbers show the recession in. So we'll continue to watch that. But in any case, the long story short here is the CPI showed a little more inflation. That means the Federal Reserve can't cut as aggressively. Thus, that's a negative for the market. And you can see the spike down right here. So we got a nice spike down on that number. We continued lower, but then rallied off to close up off that low, making a nice little tail there. Now, we continue to push up, basically right to this line, and this becomes now the breakout line. Notice how we can draw a line straight across, and that becomes the breakout point. Alright, so there we go. And notice how the top of this candle now becomes basically the top all the way across of any candles. You had little wicks above trying to get above, but it could never get above. So this is the point you're watching intraday. Alright, so keep an eye on that. Now, all day we're bouncing up there, we're ticking above, but we always close the candle on the 10-minute period below or on that line, and we tick down to the 20 moving average, tick back to the upside of that line, tick down, and so forth. Well, guess what? Ultimately, right around 12 o'clock, we got a push, we broke through that line, and then it's off to the races. And you can see how key that line is right there. Alright, one other line you want to be watching here is this line right here, which you can see. We never broke that line. If you're looking on the downside intraday, these are the lines you have in the market. And we pointed this out in the intraday stock chat because it's actually a triangle. And I'll remove this line just so we can see that triangle a little clearer. But ultimately what you're seeing here, and I'm just extending these lines, is you're seeing a triangle. Alright, see it right here. Alright, so basically intraday, when you're analyzing these charts, you need to have that triangle built in, because you have to be prepared to go either way in the market. You know, we did think the market is due for a bounce, and you guys that have been following, you know we had the 3-day pullback over, you know, last Thursday, Friday, Monday, and we've been saying that we do expect a second leg up. We called the bounce early last week, dead on, and we do think there is one more bounce up in this market, just because purely on psychological nature and technical nature here. All right, there are too many technical signs signaling that we may have an ABC up pattern here or ABC wave. And also, you got psychologically, this market expects a move to the lows. Whenever you expect something like that, the market has to do the opposite. You have to take the money from the weak hands that expect what everyone else expects and distribute it back to the larger hands that are going to push this market the opposite way. So in any case, we had a triangle here. Basically, a break of this line to the downside, you're looking for a move back to the lows intraday down to here for a short. If you break to the upside here, you're looking for a move to the upside, and ultimately we got the move to the upside here. A big push right into that 200 moving average. You can see it traded in a sideways pattern once we got there, pulling back. And again, I want to point this out because whenever you hit a moving average, it's always a pullback. It's very rare you bust through on a first move over a moving average. Notice here, first time we hit the 50 moving average, it took multiple times before it broke through. Same thing here. You hit it once in this candle, you pierced it, but you never closed above that line. You got a couple 2 points of pulled it back here, and then finally you got that blast through. Once you're above, then you wait for a pullback. You never want to buy at this top. All right, there's too many amateurs buying there. You want to wait for the pullback back to that support line right here, at which point you jump on board again, and you can get another push, you get a little pullback there, and then a blast off again. Ultimately, we pulled back into the close a little bit, and then traded up again. So there's a couple keys here. The keys that I want to impress upon you is once you get that breakout candle right here, for instance, especially right over here breaking through, wait for the pullback. In this situation, you got to push through. It never pulled back. No big deal, so you wait for the next time. To be a profitable, consistent trader, you have to be disciplined. And in this situation, believe it or not, I probably would have waited for a pullback. If I was waiting for the close of this candle, I would have waited for a pullback. It never would have come. Ultimately, I would have missed that move. But you know what? On this move right here, I would have been waiting, bought right here. It never closed below this 200 moving average, and I would have made the whole distance right up to here. So yes, you would miss a small move here, or a nice move nonetheless, but it's safer that way, and as a trader, to be consistent, you have to do that. I can't stress enough how important that is to keep discipline in your trading game and play the correct moves, okay? You wait for pullbacks at support lines, just like you wait to short until it hits a resistance line to the upside. All right, now let's look at the daily here, and we've gone over enough of that intraday jargon now, and I want to really focus here. But one thing I want to show you here on the NASDAQ, this is the NASDAQ intraday. You can see that nice trend line right there. You can actually see a nice little channel developing right there on the intraday NASDAQ. The NASDAQ was the stronger index all day, but now let's really focus in on the daily. And the daily's beautiful here, and I want to start off with the SPY daily. So here's the SPY daily. Notice this consolidation was going on right here, okay? Right here. All right, you're still above the 20 moving average, so you got to favor the upside, okay? So right now we actually gapped lower this morning on the daily, and again, this is the day, this is today, and you actually gapped lower, but they were able to save the market by pushing it back above the 20 on the SPY. To me, that tells me there's strength in this market, okay? And notice the channel we're trading in here. You got to the downside this point right here, to the upside this point right here. Ultimately, I showed you guys this yesterday, we're in a tight range. If you draw from this one move up all the way across, you're basically sitting here on support, which is a tight range. You can even look to this point right here, and you can see we basically, except for this one day here, we've been trading in this sideways range. You had an upside outlier there and a downside outlier there. Ultimately, it's in that range. Now, on the NASDAQ, you have the same basic thing that we're forming here. Look at this little zigzag pattern. 1, 2, 1, 2. All right, now what we want to see on this NASDAQ is it push back above this 20 and then make a possible another move higher. Ultimately, you're going to hit resistance in near term, and this is going to be light resistance right there, a little more resistance right around here, and to the upside, ultimately a possible move to here. All right, I think that will be the extent of it, and then we're going to see another blast down, which could be very powerful. Also, keep in mind, you got the overlying triangular pattern, so you can watch for these breakouts. All right, just like I showed you that intraday triangle, you want to watch this larger triangle, and this triangle is also on the SPY. All right, so let's take out a couple of these things on the SPY here so we can actually see the triangle a little better. But you got to watch for these constants here. All right, it's very key to keep watch of all the patterns that are developing, and I'm not even seeing all of them, folks. I mean, I'm just doing this video on the fly. This is purely on the fly. That should be anyways, long story short, here's the triangle. you can be watching to see which way it breaks out here, and that can give you a sense. I got to believe that the SPYs may make a run at that high of that 50 moving average, which is basically coming into this support line right here. All right, it's going to be one and the same by the time it gets up there, and that's going to be a lot of resistance in that point right here, and that could be the move up that we're expecting to come. All right. Now, again, and I always want to stress this is just my opinion. You know, it looks to us like we're going to have one more move up, but we could be wrong. You could go down. Always stay cautious in this market. Bear markets are the hardest markets to trade, obviously, therefore bear market, so be careful. All right, let's quickly look at the cues as we are running out of time here on the video. Same triangle formation, no doubt about it. Same channel here to the sideways pattern that we're seeing. All right, there's the triangle roughly put. Here's the trend to the side that we've been in, basically flip-flopping back up in this triangle. The question is, which way does it break? We favor the upside slightly, but anything can happen. Have a wonderful evening, guys. We'll talk to you tomorrow. Tons to do. Come join the chat room. We'll see you soon.